Hi, JJ here with the Art of Value. Well, Ryan Cohen, meme stock king, activist investor and entrepreneur, is getting involved with Alibaba. He's bought a big load of shares reportedly. Why does he want to do that? What's he doing? Let's get into that today. Ryan Cohen has reportedly, via the Wall Street Journal, has bought hundreds of millions of shares in Alibaba over the last few months. What's he up to? He's known as the meme stock king. That is, he's been very influential in sending meme stocks higher and getting retail investors to be involved. When I see something like this, I kind of think it's more hype. He was involved in his own company, a good entrepreneur that made over $1 billion apparently, but he got involved in stocks like Bed Bath & Beyond and AMC, GameStop. He's involved in the company GameStop. So when I see something like this, I think, why is he involved in Alibaba? It's a Chinese company. Will he have much influence? Apparently he wants Alibaba to do more buybacks, to get more involved in buybacks. And frankly, I kind of agree with that. I'd like to see that too. But do I think that Ryan Cohen can influence the outcome of that? I mean, it's a Chinese company. This is not a smaller meme stock kind of company, a small US company. This is a Chinese company. So what can he do? And what does it mean for shareholders? According to the Wall Street Journal article, with information being spread around the internet right now, Ryan Cohen's objective here is he thinks that the stock can go much higher based on more aggressive share buybacks, much more aggressive, and he thinks the company can achieve double-digit sales growth and free cash flow growth over the next 5 years. Let me quote just directly from the article for a second. It says, activist investor Ryan Cohen has built a stake in Alibaba Group with hundreds of millions of dollars and is privately pushing for the Chinese e-commerce giant to accelerate and further boost its share repurchase program, according to people familiar with the matter. We have to be wary when we hear people familiar with the matter. There's no source there. Maybe it's him himself. I don't know of his intention of making it public. Mr. Cohen, known as the meme stock king for helping ignite explosive rallies in GameStop Corp and others, built the stake in the second half of last year. While the stake is small in comparison to Alibaba's market capitalization of nearly $300 billion, so his stake is big, but can he really do much? This is a mega cap company. Mr. Cohen has a wide following among individual investors who often follow his lead. So perhaps that's being hoped for here, is that a lot of retail investors, but could that really move the stock? I kind of think that this is sort of a bit of a circus. It remains to be seen whether it will move the share price at all or whether he can have any effect. So I think this is kind of more just sort of definitely on the hype side of things. I mean, we'll see what happens, but for shareholders, I think maybe it won't really mean much apart from putting more attention onto Alibaba because the stock is underpriced. Well, I think it is, and he obviously does too, and so do many other investors. Not investment advice, but that's just my opinion. If you're getting value out of this episode and watching on YouTube, please hit that like button to help with the algorithm and to give me that little dopamine hit that we all crave so much. Thanks. I actually agree that the company should do more buybacks, so not unhappy if that's the kind of result of this. And it goes on to say, Alibaba shares have climbed nearly 67% from a multi-year low in October, with its ADRs closing at $117 on Friday. So that was last Friday, but are still down from a high of $300 reached in 2020 as technology and other shares rallied in the early days of the pandemic. It's had a big rally, 67%, and I'm liking that. I'm not sure if it's got anything to do with Ryan Cohen. A little bit about Ryan Cohen, in case you don't know. He was the founder of Chewy.com, which got sold to PetSmart for several $1 billion, so he became very wealthy there after building that. So he does have an e-commerce background. He's knowledgeable, so I guess he feels with Alibaba that he knows kind of what he's talking about there. He could know a bit about the company if he got involved in it. And then he moved on to the meme stocks. He took money that from the sale of that, he had substantial wealth, got involved in GameStop. He's the chairman of GameStop, had a 10% shareholding of that, I believe, so he's able to affect change there, and I think that was the hope, that he could help GameStop change from a kind of dying retailer to sort of an e-commerce gaming company, which turnarounds are hard, so it still remains to be seen whether he can do that, but obviously getting involved in other companies, meme stocks as well, not just in meme stocks. Obviously, I could see this as a kind of value play or activist investor. This actually reminds me of when Carl Icahn, if you've seen that program about the documentary about Carl Icahn, there's a bit in that where he talks about Apple, getting involved in Apple, bought a big stake. It was much bigger than this stake in Apple, and he wanted Apple to buy back shares because they had such a huge amount of cash lying around. They weren't really doing anything with it. They weren't reinvesting, just had this huge amount of cash. He wanted them to buy back shares because the shares were cheap at that time, and he succeeded in that. He had dinner with Tim Cook, and I think Tim Cook, he said, actually agreed with him. He just wanted to convince the board, so that was successful. So this, you could see this is a similar play where he wants to go in and force or encourage Alibaba to buy back shares at a much higher rate while the shares are still cheap. Remains to be seen whether he could do that. Not sure he's got the clout to do that, but it might happen anyway. And this is in China, so the Chinese government's involved too. Are they going to appreciate a US investor trying to get involved and enforce this kind of thing? I don't know. I don't know. And that's a big part of the issue. Even though I would like to see Alibaba buy back more shares, a lot more shares, while they are supposedly cheap, and I think that they are. So it's a really good time to buy back shares. That's a good time for management to do that. I consider that really good capital allocation. That's when you do it, not when they're expensive. I've been thinking that perhaps Alibaba isn't stepping it up because of the Chinese government. The perception that they're buying back shares to kind of help enrich shareholders is not a particularly good look over the last few years in China about wealth inequality, and they did crack down on technology companies. So perhaps that is a reason why they haven't stepped it up when they could, and maybe they think it's the best thing to do. They don't want further scrutiny, further regulation, so maybe they're just kind of doing it in an average, regular, steady way rather than going aggressively like Ryan Cohen and perhaps some other international shareholders would like. So another company, of course, that Ryan Cohen got involved in is Bed Bath & Beyond, which is looking like bankruptcy, heading into bankruptcy. He got involved, and a lot of retail investors, a lot of meme stock investors rushed in after him, and the stock rose higher. And frankly, he got out and made $60 million there quickly, but it kind of looked like a sort of pump and dump kind of thing. And now the company's still in trouble, and a lot of people kind of got left holding the bag as well, thinking that it's still going to work. Having done something like that, I think it's a little bit dubious, so I'm not sure what he's trying to do with Alibaba. During that whole Bed Bath & Beyond thing, the CFO jumped off a building. You might have seen that in the news. You know, somebody who's involved in doing something like that, in terms of making a quick buck from a sort of dying company like that. He's using his audience, we could say, or followers to make a quick buck. We'll have to see what happens with Alibaba if indeed this story is true. I care because I'm a shareholder of Alibaba, so I care what happens. And on the other hand, if someone like Charlie Munger got involved, as he did, and bought sort of tranches as the price dropped, and so he would have a lot more credibility from my point of view, or if Warren Buffett got involved, or somebody who had a much longer track record. I mean, Ryan Cohen is a very successful entrepreneur and investor. You can question the methods and means to some of those things, but if Charlie Munger, for me as a value investor, it kind of means a lot, because he tends to buy his few bets, he swings big, and then he doesn't touch it for a long time. For me, I'm happy with it long term, see what happens. I'm not sure if Ryan Cohen will bring anything to the party. The worst thing probably would be if it did go up short term and then kind of go down again just because of artificial inflation of the price, like happened with the meme stock bubble. When it was a bubble, definitely a moment in time in a crazy kind of market. That's my opinion anyway. Okay, so let's see what the article says specifically about the buyback program, what he wants out of it. The shares have been hurt by depressed consumer sentiment in China as the country continues to grapple with the pandemic and sprawling clamp down on technology companies there that caused Affiliate Ant Group to call off its highly anticipated IPO in Shanghai and Hong Kong. So yes, that's been part of the whole uncertainty with Alibaba. It goes on, subsequent to Mr. Cohen's initial communication, Alibaba in November announced its board approved expanding the company's share repurchase program by 15 billion to 40 billion, while also extending it through to March of 2025. Alibaba said it had repurchased roughly 18 billion of its shares under its existing buyback plan as of November 16th. Mr. Cohen communicated to Alibaba's board the share repurchase plan could be boosted by another 20 billion to roughly 60 billion, the people said. So I wouldn't be against it if they did that. Obviously, I think it's a historic time in terms of the kind of crash in price, so that would be the time to do it. Kind of makes out like he possibly had something to do with them thinking about increased repurchase, but I kind of doubt that they would listen to him really, even though he's got a substantial shareholding. The activist investor has expressed his admiration for management's ability to achieve earnings growth while also assembling quality assets. They added, Mr. Cohen wants to have a collective long-term relationship with Alibaba, the people said. So that's a good thing. He wants to be long-term, not just like a quick rise and get out, although that remains to be seen whether he would do that if it rose a lot. This is where it gets interesting in terms of the similarity to Kyle Icon's Apple purchase or encouragement to buy back shares way back in the day, many years ago. So he says, Mr. Cohen has also conveyed his belief that Apple, in which he owns a more than $800 million stake, could provide a roadmap for Alibaba. The people said, since 2012, the iPhone maker has repurchased hundreds of billions of dollars of its shares and the stock has soared. So the intention that if they buy back, the stock will soar as the share count gets lower. So it implies that is his intention, similar to Carl Icon's pressure on Tim Cook back in the day on Apple to start repurchasing shares while the PE ratio was low in those days, while the share had gone down. When Steve Jobs died, people were wondering, Apple was very uncertain. Warren Buffett expressed confidence in him by taking a major stake while the shares were low after Steve Jobs died. So obviously Ryan Cohen sees that a similar thing can happen here with Alibaba. If they repurchase a lot of shares, that will trigger a share price rise, and I certainly wouldn't be against that. I just doubt whether he could achieve that by himself. Maybe he'll have others to join together with. That would be interesting. I couldn't see him joining with Charlie Munger, but other investors who have a big stake, maybe it's possible then. We'll have to see what happens. It's going to be interesting this year, that's for sure. So in summary, I think it's an interesting development. We'll see what happens. It seems to be probably more hype than anything. And I wonder who made this public, who kind of leaked it. Was it Ryan himself? We'll have to see. In any case, it's going to be a really interesting year for the Alibaba, the company and the stock, at being, historic low prices from over the last 5 years. Can anything like this help? Will other investors get involved, take an activist role? I mean, this is China we're talking about, so, I fail to see how really any kind of US investor, unless they're actually massive like Warren Buffett, could have an influence. Anyway, we'll have to see what happens. If you've enjoyed this video, if you got value out of it, consider subscribing if you're watching on YouTube or in your favorite podcast app, and I'll see you again